and welcome. You have tuned into Market Fatafat right here on ET Now. I'm Shrishti Sharma and with me is Snehisha, and over the course of next 1 hour, we're going to be taking you through all the stocks that are buzzing in trade right now, either on the back of the news flow or on the back of the technicals. But first things first, Snehi, what a move on the benchmark indices, because look at the move, especially in Nifty Bank, more than 2% gain coming in. Seems like the markets are going and having that cheerful mood as we look forward to that long weekend.
Absolutely, looking good heading into the long weekend, and lots of cues are lined up for us in terms of earnings later today as well as over the course of the weekend. So we can't say how we're going to be looking on Monday, but for today we are looking spectacular in today's trade. Let's pull up the Nifty first and talk about what the Nifty is up to. We're now very close to the 23,800 mark as well. In fact, at the day's highest point, we were only 1.5 point away from that, but we've receded slightly from there. Nonetheless, almost at the day's highest point is where we are on the Nifty. Almost a 1.5% uptick coming in ever since the get-go today, ever since the opening bell. We have been holding on to some firm gains coming in on the Nifty today. So looking rather good today. Nifty Bank as well, like Shrishti mentioned, only a couple of 100 points rather away from its all-time high. So Nifty Bank also looking rather good, more than a 2% uptick coming in for Nifty Bank in today's trading session as well. Let's talk about the broader end of the markets as well, what the Nifty mid-cap and small-cap space are up to. Nifty mid-cap and small-cap, today they're underperforming the benchmarks. Nonetheless, almost at the day's highest point is where both of them are, 0.3% and 0.4% each, coming in on Nifty mid-cap and small-cap. Sensex too is holding on to some good gains in today's trading session and firmly in the green, almost 1.5% higher, or rather more than that right now, is the Sensex, almost at the day's highest point as well. Advance decline ratio very steeply in the favor of the advances today, so the market breadth is looking good. India VIX is up about 1%, but not much to worry about on that front as well. Today, Zomato is the biggest Nifty 50 gainer, a 5% uptick coming in on that stock. On the flip side, Wipro is the one that's weighing on the index, almost a 5% cut coming in on that stock. Other than that, let's talk about stocks like Bharti Hexacom, ICICI Bank, Bharti Airtel, Chambal Fertilizer, Interglobe Aviation, HDFC Bank and Eicher Motors. All of these stocks are at their all-time high levels today. So looking very good for a bunch of these stocks. And rather than that, it's the financials, because the names like ICICI Bank and HDFC Bank have hit their all-time high. Nifty Bank, of course, the biggest gainer. SBI, you have Axis, IndusInd, Canara, Bank of Baroda, PNB. So it's a mix of your private sector as well as the PSU banks that are participating in this financial rally today. Followed by that, you have financial services, PSU banks, and then energy, auto, pharma, realty, metal and FMCG are your sectors in the green. However, in the last couple of minutes, Nifty Media has slipped onto the red, but IT continues to stay under pressure. But a sharp recovery coming in Nifty IT as well, because for most of the trading session today, Nifty IT has been in pressure of excess of 1%, and right now it's almost 0.5% in the red right now. So almost at the day's highest point is where IT is as well, and it seems like the market momentum has gotten to Nifty IT as well, because stellar recovery is what we have seen from the day from the day's lowest point for Nifty IT as well. Largely, this is what the market is looking like right now, and lots of stocks that are in focus, Shrishti, and we'll be talking about them on the show right now.
Well, certainly not just us. It will be our team of researchers as well as our technical expert that will be joining us on the show. So let me welcome Ashish Kyal on the technical front. He's joining us from Wave Strategy Advisors, as well as Gaurav and Ravinder are also in the show right now. A very good afternoon, gentlemen. And let me first start with the first counter that is in focus, and that is Alembic Pharma, because pharma space of late is not doing that well, but Alembic Pharma indeed is in focus on the back of the news flow, wherein that did suggest that Alembic Pharma has got an approval for one of their recent drugs coming in from US FDA. So that's why the stock is in focus today. What we are getting to hear is that this has got FDA approval for carbamazepine tablets. That's quite a complex drug name for what Alembic Pharma has got an approval for. That's not a big ticket drug for this particular company, but well, indeed, this news flow is seen to be on the positive side. This particular drug is used to treat certain types of seizures and bipolar disorder as well. So that's why Alembic Pharma is in focus. The stock is almost trading flat as we speak right now.
Pharma almost flat, but Ashish, coming to you. Hi there, good afternoon and welcome to the show. RCF is the stock that you've picked out from us. Now, RCF is holding up pretty firmly in today's trade. Its peer also, Trumbull Fertilizers, has hit its all-time high. Are you looking like at RCF? Are you looking at something like that for RCF as well? And what is RCF looking like on the charts going ahead?
Yes, if you look at Chambal Fertilizer, that has been up and away, but RCF has not done that. RCF is way down from its 52 high, which was 240. It's trading at 140 right now. But having said that, the stock has made a double bottom kind of a pattern, gave a breakout of the neckline right now, and also the volumes have picked up pretty steep right now as we talk. So the overall trend for RCF looks to be positive. I think there is a lot of catch up to be done. On the upside, the near-term target for the stock is 170, and on the downside, I think 135 can be the support level for the stock.
Review coming in on RCF. Let's move on and talk about two stocks that are in focus today, and that's L&T and KEI Industries, both going in the opposite directions today. L&T is in the red and KEI Industries is cementing some good gains for itself today, and this is on the back of a Goldman Sachs note coming in on the industrial space, wherein they have downgraded L&T to neutral from a buy rating, and target price has been set at 3,330 rupees per share. For KEI, they have upgraded the stock to a buy rating from neutral and target price at 2,980 rupees per share. They're saying that this is on the back of the analysis of tariff uncertainty and the impact that it has on Indian industrials growth, and growth and margin is also going to be in focus. New factory capex may be deferred. Lowering orders is something that they are seeing for L&T, partly offset by lower commodity prices and finance costs. Ports and logistics to see a 4 to 5% revenue impact in FY26, FY27 is what they are penciling in, with lower multiples for some capital goods stocks. So out of this entire industrial space, they're negative on L&T at the moment, but they're liking KEI Industries. On the back of that, while L&T is trading with a slight negative bias, KEI Industries is up 3.5% as we speak.
So that's why both these counters are in focus. But let's move on. And Ashish, let me come to you for your first counter of the day, and that is Hutco. What a move we have seen in the past 7 to 8 days. But help us understand that on the technical front, what are you penciling in and where do you see the stock headed?
Yes, indeed. The stock has shown very sharp rise over past 7 to 8 days. But if you look at the monthly chart or from a bigger perspective over the period of 1 year, the stock has not done much. So from a year's perspective, there is a lot of retracement that can still happen on the upside. The prior peak of the stock was at around 260 level from where the correction started. So there is a possibility we can go and retest that 260 levels on the upside. And on the downside, the support for the stock is around 220.
Okay, so that's the levels to watch out for on Hutco. But Rabinder, coming to you, stock of the day quite literally is what you've picked out for us, and that's Wipro on the back of its earnings and weak guidance coming in. Stock under deep pressure. Give us more details about this.
Wipro is in focus on back of Q4 earning, where company's USD revenue was declined by 1.2% quarter-on-quarter basis at $2,596 million, and company's PAT was up by 6.5% quarter-on-quarter basis at rupees 3,588 crore. And if we talk about IT service margin, then IT service margin was saw at 17.5%. So company's IT revenue and margin was in line with street expectation, while PAT was above the street expectation. There are few triggers for Wipro fall. First is large deal, but revenue lagged at 83% quarter-on-quarter jump in large deal. But the company revenue impact to take time due to client cautions, and revenue and deal flow from Europe expected to face headwind. And third is the company guided for a 1.5% to 3.5% CC revenue decline. Street was expecting a growth, and there are also some brokerage note coming on Wipro, where Kotak Security has maintained a sell rating on company with target price of rupees 225. Morgan Stanley has maintained underweight rating on the stock with target price of rupees 216, while Bernstein maintained an underperform rating with target price of rupees 200. So back of this Q4 result, stock is down by 4 to 5%.
Okay, so that's the reason why the stock is tanking away. But after posting a mixed set of Q4 earnings, we also caught up with the management of Wipro. Srini Palya, the CEO, has given his guidance for the US and Europe business. Let's listen in to his expectations of the growth going ahead.
So if you look at our numbers, especially for the financial year FY25, and if you look at overall as a Wipro, we have de-grown. Having said that, if you look at Americas, which contributes to almost 63% of our revenues, it has grown 1.2%. Also APMEA, which has de-grown for us this year, the last quarter, they have actually shown a sequential growth. I think our challenge right now has been Europe. The good news about Europe is that we got a new team, and we have won a large deal which we'll start ramping up sooner, and we also have a very strong pipeline on the back of this large deal win. We want to make sure that we win these deals that are there in the pipeline. So in that, the guidance that we are given is in the context of these three aspects as well.
All right, so that's the take coming in on Wipro. But moving on, Ashish, once again coming to you, help us with your take on L&T Finance, because financials are definitely on the roll. And L&T Finance, this stock too has seen its fair bit of a correction, but now it seems to be making a comeback. What on the technical front are you spotting?
See, if you look at financial stocks, if you look at Nifty as an index as a whole, that is touching all-time high levels already. And Bank Nifty is edging towards that. So it looks like the interest-sensitive sector, and stocks like L&T Finance should also head there. And L&T Finance has just given a break above its prior resistance, which was 160, and it's trading above that. So the overall tone is on the buy side for this. We can expect it to move towards the level of 175 on the upside. And on the downside, the support for the stock is going to be around 158 levels.
The key levels to watch out for on L&T Finance. Let's move ahead and talk about another stock in focus, and that's SBI Card and Payment Services. The stock is in focus today on the back of its partnership with Tata Digital, and they have announced the launch of Tata new SBI Card. Now, this one-of-its-kind lifestyle co-branded credit card has been designed to provide a premium and highly rewarding shopping experience for discerning customers across segments. This co-branded card has been launched in two variants, which is Tata New Infinity SBI Card and Tata New Plus SBI Card. Customers earn rewards on all spends, whether online or in-store, and across domestic and international merchant outlets in the form of new coins that are redeemable on the Tata New app. So on the back of this collaboration between SBI Card and Tata New, the stock is up 1.2% as we speak.
All right, let's put the spotlight on HDFC Bank, and Gaurav, coming to you, that's the sector that you track very closely, but this is also one of the earnings candidate. Help us understand what is the street penciling in, and what exactly are the street estimates telling us?
The biggest private sector bank, which is HDFC Bank, is coming up with their quarterly results this weekend. And let's also focus on what the street is penciling it. So we have already seen the provisional updates were very strong. In fact, when we talk about deposits, we saw a growth of around 14 to 15%, while advances also grew at around 5% level and around 4% level on a sequential basis. So on the back of these numbers, now street is penciling in around 4% or 7% of the growth in net interest income. When we talk about PPOP, now they're expecting PPOP to go down a little, almost by 12%, and the reason being that other income is likely to remain weak for the bank. But on the other hand, when we talk about asset quality, they do not see any kind of concerns, and that is the reason why they expect the profitability to increase almost by 4% on a year-on-year basis for HDFC Bank. Other than that, when we talk about net interest margins, which is another key point to focus on, they do not see any kind of downturn coming up for net interest margin. They're expecting some moderation of around 3 basis points, but all in all, a good set of numbers is what we're expecting from HDFC Bank. On the back of these expectations, we've already seen that HDFC Bank has hit its 52-week high level and all-time high level as well. So definitely watching out on the HDFC Bank on the back of the good set of numbers that we're expecting from the bank in Q4.
Okay, so looking good for HDFC Bank today, and that stock is also at its all-time high. So Gaurav, thanks for that, and all eyes are of course going to be on its quarterly earnings. But on that note, we'll slip into a very short break on this edition of Market Fatafat and keep it going with more buzzers on the other side when we return. So you stay tuned. Hi there, welcome back to Market Fatafat. You're watching ET. Now let's bring back on board Gaurav, Rabinder and Ashish on the technicals. And Ashish, coming to you, GMR Airports is the stock that you've picked out for us. Now when I pull up the charts of GMR Airports, last 3 months itself, the stock is doing pretty well, up 14%. What kind of momentum are you seeing for GMR Airports on the charts from here on now?
The GMR Airport, we can clearly see after it formed a low at 78, showed a very sharp rise, currently trading around 87 levels, and there is a possibility the stock can move towards the level of 94 as well on the upside. It has formed a classic rounding bottom kind of a pattern, giving a breakout of from there, and the upside target is 97 in conservative way. So on the downside, the support for the stock near its 10 days moving average comes to around 84 levels.
All right, so let's watch out for that. But other than that, in some of the news makers, it's Sonata Software. Let's pull up that stock because just at the start of the day, the stock was actually down anywhere between 8 to 9%. But with the market recovering, the stock has recovered too fairly. But the commentary is not that great because the company is saying that the revenue estimates for Q4 from the largest clients are likely to be lower than what they anticipated before, and that will definitely result in the lower revenue from the international business that they have previously envisaged. And on the back of that, the stock is in focus and definitely still holding on to the cuts of almost 6% as we speak right now.
Okay, so Sonata Software in deep pressure as we speak. Let's move on. And Ashish, you've taken another stock that is at its life high right now, and that's Bharti Hexacom. Tell us what's the outlook from here because the stock has already surged 23% in the last 3 months itself. Is this sustainable on the charts, or are you watching out for some kind of dip now?
See, if you look at Bharti Hexacom, we can clearly see there has been a very, very sharp move on the upside. The stock is currently, I think, around 1630 levels, and we can clearly expect it to continue to rise higher over here, avoid catching a top. It has broken above its previous resistance hurdle at 1380, 1400 levels as well, and the overall tone is bullish. So we can expect it to move towards the level of 1800, and on the downside, use dips to buy as long as on the downside, the support of 1570 remains intact.
Right, that's about Bharti Hexacom. Let's watch out for this particular counter. But other than that, one of the other result candidates has been Angel One, and Ravinder, take us through the earnings fine print of Angel One.
Because the company has announced its Q4 number, and the company's revenue was down by 22% year-on-year basis at rupees 1056 crore, and net profit was also down almost 49% year-on-year basis from 340 crore to 175 crore, and EBITDA also saw a decline of 35% year-on-year basis. And if we talk about margin, then margin also saw a decline of almost 700 basis points from 39% to 32.5%, and total client base was at 31 million, which was up by 5.1% quarter-on-quarter basis. And the gross client acquisition was at 1.6 million, which was down by 23% quarter-on-quarter basis. Although the Angel One Q4 number was weak, but the stock has recovered 5 to 6% of days high.
The take coming in on Angel One, that's the reason why the stock is in focus. It was under some pressure but has recovered with the market momentum. But let's move on and talk about BHEL. This is also a stock that is holding up rather okay in today's trade. A 1% uptick coming in on BHEL, and the company has entered into a technology transfer agreement with the Bhabha Atomic Research Center, which is BARC, to access indigenous diaphragm technology for electrolyzers, seen as a critical step in advancing India's green hydrogen ambitions. The deal focuses on BARC's mixed matrix membrane diaphragm technology, which will be used in electrolyzer systems to separate hydrogen and oxygen during electrolysis. With this transfer, BHEL aims to fully develop and manufacture alkaline electrolyzers domestically, reducing import dependence and supporting the government's national green hydrogen mission as well as the Make in India push. So positive coming in for BHEL on the back of this tech agreement that they have signed with BARC, and on the back of that, stock is up almost 1.2% as we speak.
All right, that's about BHEL, but let's shift focus back to financials then. And Gaurav, ICICI Bank, one of the other result candidates, tell us about the estimates.
When we talk about ICICI Bank, in the past we have already seen that the bank has actually outperformed its peers as well as the system, because when we look at system growth, it is growing at around 11%, but when it comes to ICICI Bank, now the estimates are that ICICI Bank's loan book growth can be at around 15%. And on back of this, when we talk about profitability also, when it comes to net interest income, now people are expecting 9% growth on a year-on-year basis. PPOP growth is also expected to remain healthy at around 14%, and as a result, when we talk about asset quality, there are no concerns that the street is at least estimating right now, and thereby when we talk about profitability, the street is expecting around 11% growth on a year-on-year basis for ICICI Bank. When it comes to net interest margins, now they're expecting net interest margins to remain stable with some upward bias technically, and that is the reason why when we talk about the entire sentiment, it remains positive for ICICI Bank. Let's also not forget that the ROA profile for ICICI Bank is strongest in the private sector banks, and now the street is expecting this to remain same for the bank in Q4 as well. So once again, a very strong quarter is what the street is expecting from ICICI Bank. Definitely commentary is going to be a key thing to watch out for, but as of now, on the back of the good set of numbers, we are watching out on how the numbers actually come out for ICICI Bank in Q4.
So that's the reason why ICICI Bank is in focus as well. All eyes are going to be on the earnings. Ravinder, coming to you, ABB India is what you've picked out. Now it's an earnings candidate, but not directly. It's the global parent that's come out with its numbers. And on the back of that, ABB India is also doing pretty well. Tell us what the numbers of the global parent look like.
India is in focus, where ABB Global has announced its global business update for Q1 2025, where they say that the company's order was up by 3% year-on-year basis at $9,213 million. And if we talk about the revenue, then revenue also saw a uptick of 1% year-on-year basis at $7,935 million. And the income from operation was at $1,567 million. And if we talk about margin, then margin was at 19.17%. And coming to India business revenue registered a growth of 1% in Q1 2025 as compared to which was down by 21% in Q4 CY 2025. And if we talk about Q2 CY 25 guidance, then the company said that the revenue growth will be a mid-single digit and the operation EBITDA margin to remain stable with last year 19%, and they expect improved business result in 2025, offset year-on-year headwind from favorable net non-repeats of 30 basis point in corporate and other in the Q2 of 2024. So back of this business update, stock is up over 4%.
All right, that's the news flow coming in on ABB India. But Ashish, that's the stock that you have been tracking on technicals too. Almost a 4% jump already. But where do you see this stock headed?
See, if you look at ABB India, the overall tone for the stock is bullish. We can clearly see there has been a jump in across the board because we can clearly see the buying has emerged slowly and steadily into the stocks that have been also falling sharply. So ABB India made a low around that 4,800 mark. From there, started showing recovery, and that's a good sign. The stock is now near the previous pivot level of 5,600, and I think it should break above that level as well and sustain there. So the overall tone is bullish. We can expect it to reach towards the level of 6,200, and on the downside, the support for the stock comes to around 5,300 levels.
Okay, so key levels to watch out for on ABB India on the charts. But let's move on and talk about a stock that's under some pressure in today's trade. 0.5% coming in on IDFC First Bank on the back of their approval for fundraising. They've approved an aggregate fundraise of up to 7,500 crore rupees from two separate investors at its board meeting that was held earlier today. The board has greenlit raising up to 7,500 crores, which is approximately 900 million, 877 million to be precise, through a preferential issue of compulsorily convertible preference shares to two prominent investors, Currency Investments BV and Platinum Invictus B 2025. Now, Currency Investments is an affiliate company of Warburg Pincus, and that will be investing 4,876 crores. Meanwhile, ADIA subsidiary Platinum Invictus will be adding 2,624 crores. The lender will allot 81.26 crores and 43.71 crore compulsorily convertible preference shares at 60 rupees per share to both of these investors in the fundraise respectively. So that's the reason why IDFC First Bank is in a slight bit of a pressure, 0.3% cut coming in on the stock.
All right, but on this particular news flow, we also spoke with V. Vaidyanathan, who is the MD and CEO of the bank. Let's go across and listen to him.
Book value per share actually goes up of about 2.3% or so. So, that's important to note. Now, with regard to, EPS, of course, comes down by 15%. It's pretty straightforward because dilution is 15%. But honestly, we should not look at it like that. It is also, I don't deny it is. But the way to look at it is also that we're building a bank of the future. So in the sense that early stage banks don't have return on equity, don't have adequate return on equity. These banks start with zero. So when you need growth, you don't have return on equity, you have to dilute. But the good news is that it is the last 5 years made a lot of progress on return on equity. Next 5 years will make a lot more progress on return on equity. So at some stage, I really believe this bank will become self-sustaining on capital, and that will be a very, very important moment for the bank.
If you like this video, then like, share and subscribe to ET Now.